Good morning. I've begun to looking into becoming a private lender to start my real estate journey. What are some of the benefits and pitfalls you've seen in private lending? Well, I think the benefits are pretty clear. I think the benefits are getting that monthly interest income. So you have you have the ability to create your own terms. So whatever investment would be beneficial to you, you have the ability to kind of have positive control over what that looks like. If you want that loan to be amortized and fixed from the beginning, you can do that. If you want it to be interest only with a 4-year balloon, you can do that. So as the private lender, you just have to set whatever terms you're happy with and then find somebody willing to take you up on those terms. So I think that private lending is really solid as an investment alternative to things like the stock market or historical financial institutions, because you are in positive control. You have the ability to set your own terms, and you also are able to get in there and actively do something if your investment isn't turning out the way that you expected. So if they default or do anything that you're not a fan of that violates your agreement, you're able to foreclose and start that foreclosure process and kind of seize or take ownership of any of the underlying security. So you're also able to set or determine how collateralized your loan is. If you want to be 50% loan to value, you can. If you want to be 75% loan to value, you can. If you want to be 100% loan to value, you can. It's entirely up to you. So when you are the lender, you set the rules. One of my favorite quotes is, "He who has the gold makes the rules." And when you're a private lender, it couldn't be any more true. So that is the benefit. I would say the downside is it takes more attention. Uh, it takes a little bit more skill, a little bit more sophistication than just throwing some money at a TD Ameritrade or whatever, TD Blake, TD whatever. And then if you compare it to the actual underlying investment, right? So if you're a private lender on businesses, then I think one of the pitfalls is just the understanding of, if you were to actually do the business, then you would probably generate a couple more benefits, right? So like when you are the private lender, the only real benefit you're getting is the recurring revenue. You are not entitled to any of the appreciation, any of the opportunities to leverage, because you are the leverage. You don't get any depreciation. You don't get to write off any of the business's expenses. So it's just really being the bank rather than the operator, so to speak. And then another one of the pitfalls is the inflation piece, right? So there's not necessarily inflation protection like there is on the operator side. So if a business is up and running, the business is protected by inflation because they're able to raise their rates, they're able to depreciate their assets and their businesses, the valuation, uh, especially if it's like an underlying asset in real estate, then you're going to be able, like the real estate appreciates, equal to or greater than inflation. So when you are the lender, let's say you lend money out at 8%, if inflation is deemed to be 10%, then you pretty much lost 2% purchasing power that year. So I would definitely try to make sure that if you're a private lender and this is maybe a small percentage of your portfolio, you can do kind of long-term lower interest rate loans. But I would say for the bulk of it, you're going to want to make sure that they're kind of short-term loans so that you can adjust for the rates of inflation as you learn about them. And I would also just make sure that you stay up to those CPIs, those projections, and also just like the costs of things like gas, milk, and make sure that you are not accidentally losing purchasing power. I would say that's a pretty fair assessment based on everything that I know. If there's anything additional that I did not include, it's because I don't know it. I think I've pretty much exhausted my knowledge of that. I like it. I'm a private lender and I enjoy it, but that's with like a small portion of my kind of portfolio, so to speak. The bulk is of me being an operator and utilizing other people's capital to grow the asset base. But I do appreciate the recurring revenue, and I have been like a private lender in situations where, so like our vehicles, for example, I bought my wife a van. It's a new van. We spent like 40 grand. Instead of taking that 40 grand and using it to buy that asset, I took that 40 grand and lent it out at 12%, which, there's a delta of like $100 per month in the payment. So that new van is costing me $100 per month. And at the end of the 5-year term of that car payment, I'm going to have my initial 40 grand and that vehicle. rather than just that vehicle that's now worth significantly less. So over the long term, I am, keeping my capital and acquiring an asset over that 5-year mark. Over the short term, I'm paying $100 per month for that loan, but over the 5-year period, I would say that's a pretty solid deal. So in situations like that, when you're trying to cover your monthly payments, I think being a private lender is great. And I would say that knowing everything that I know, my ideal setup would be that I have enough money lent out that is bringing in that monthly recurring revenue to meet all of my living expenses. So if I were to just stumble across a couple $1,000,000 and I tried to figure out how, or even like $200,000 or $300,000, right? Like if I try to figure out like where am I going to allocate these funds and why, I would say I would take a look at my monthly living expenses and try to lend out enough to cover those, and then I would invest the rest of it in like assets or be the operator with the remainder of those funds. Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.